Let me tell you a quick story. I started my career with 12 consecutive losing months, not a single winning month, month after month after month, and endless pain and agony in the process. Fast forward a little bit, and I not only became consistently profitable, but I rapidly became the number one trader at my prop firm, hitting 8-figure P&L per year in the process. So what was my breakthrough? Well, there were a couple of things, but the main one is exactly what I'll be teaching you in this video. In short, I started focusing on the easy money trades. I made that my sole focus and gained consistent profitability fast this way. And in this video, I'll not only share the ins and outs of such an approach, but I'll teach you the 5 easy trades I used to get to profitability and stay there. So stay tuned. This is going to be more than worth your time. I'm Lance Breitstein, and today I'll be teaching you about a topic that I like to call easy money trades. You can follow me on Twitter at @TheOneLanceB for more content and videos on trading. So let me tell you about a glimmer of hope. If you're struggling as a trader, remember that so was I. I had 12 months of losses. It all seemed hopeless, and I didn't know if I was going to have a career as a trader. But while I was thinking of switching to something else and quitting the industry, there was one glimmer of hope. And what that was NASDAQ witching imbalances. So for those of you that don't know, on the third Friday of each month, especially each quarter, there's what's known as witching. And that's when a lot of just rebalances are done as far as order flow, and you can see some abnormal moves. And so back probably over a decade ago, what would happen is you would get some of these tech stocks that if the market was, say, flat, just due to excess order flow, they might shoot up or shoot down. And so this was actually a strategy where I would take the other side of these, knowing that it's just order flow due to this switching imbalance, and I would be able to make a couple easy wins. And the beauty of this was it was repeatable. I was able to prep for it, and I was able to quickly build this as like a little cornerstone that I could rely on each month. So this glimmer then became a ray of light because I used that same concept in other areas. Essentially, I started to find order flow inefficiencies and little turn plays as well. I'll talk more about these. But what these did is these served as the foundation of my playbook. I was able to use these to then expand into other areas and more. So these easy money trades put me on the path towards consistent profitability, and eventually that served as the springboard to launch me to number one in the firm.
If you want to learn 3 more real-world setups that our traders use, including the simple setup that we teach all of our new traders, and the setup that turned one of our traders into a 7-figure big money earner, check out the free webinar that we're currently running. Just go ahead and click the link that should be appearing now at the top right-hand corner of your screen. That will open up the free registration page in a new window, so don't worry, you won't lose this video. You can also visit tradingworkshop.com to register for this free intensive workshop. You're going to learn more in a couple of hours from this trading workshop than from years of online education.
So the time really is now to start working on this. We all as traders have a natural human bias towards the home runs. The home runs have sex appeal, and it's so amazing to hear about the trader that had the 6-figure trader, the 7-figure trader, more. Whatever it is that you're looking up to, a lot of traders tend to overlook just the small, consistent, everyday money, the stuff that you can rely on, the stuff that you can use on in times that are good or in times that are bad. Realistically, 2020 and 2021 were home run markets. You were able to shoot out the lights and make more than you ever imagined. But 2022 is far more difficult. We've reverted more into just an easy money market where you need to hit the layups and shoot the free throws. Many traders are struggling in this market. I know 7- and 8-figure traders included that have not made the adaptations that they need. They're still trying to swing for the home runs rather than pick up the easy money. Struggles come from when you're still trading this as if it was a home run market and it's not. So the time is now again to focus on that easy money. How would it feel to have less stress in your trading? How would it feel for trading to be fun again because you're doing the easy money trades? So these trades are the foundation of every playbook. The way I categorize these are trades that are low stress, these are trades that are replicable, often high profitability, and oftentimes these are scalps and quick inefficiencies. I would say that these should be the free throws of your trading. But the key is you need to make this your easy money. What's easy for me might not be easy for you or others. So the reason why these are so important is that these are the cushion in bad times and they're your crutch out of P&L holes. So let's say that everything's been going fine, but then you find yourself in a tough spot. Maybe a trade didn't work out or you lost more than you intended. These easy money trades allow you to rely on them to build back that cushion. They allow you to hit singles and get your confidence back. Then even in good times, these trades give you the P&L to really parlay those big bets. These can be rocket fuel in good times. These help you build that confidence and create a positive feedback loop where you know that you have money you can rely on. These also reduce variance in your trading. It's okay to go for those home runs, but it's even better if you can go for those home runs with a position of knowing that you already have P&L built up, and even if something goes wrong, you have the daily singles that can help you get out of it. And these easy money trades also allow you to expand your playbook. You're a more diversified and lower variant trader when you pursue these. So let me give you some examples for me. Again, these are just me and play to my strengths. It might not be right for you. And one thing's also worth keeping in mind is that a lot of trades can be cyclical. These don't necessarily work in all markets, but there are certainly markets when they do. You need to only be playing these trades when they're in play and working. You don't blindly go after them whether they work or not. So as I mentioned, NASDAQ witching imbalances are where I really got started. These are often order flow imbalances where some institution might be trying to rebalance or an ETF might be rebalancing. And what happens is you might get large buy or large sell imbalances that come into a stock. And so essentially, in order for the market to pair off, the opposing order flow needs to then match that. So you might get a stock like AMD that's generally fairly boring, and maybe that shoots up 1-2% due to this buy imbalance. The way I would play it is knowing that this is purely order flow. I was able to expect some level of reversion once that imbalance pairs. So those types of trades were really, really consistent for me. Another thing that was really interesting is the DOE oil number. You guys will know this oil number as the Wednesday 10:30 a.m. number that comes out and often moves oil. It's the U.S. inventories being updated. So especially when oil has been in play, whether it's 2014 or back in 2020, those inventory numbers can have a really big effect on the market. So of course, the market's not so dumb. There are algos that might play USO and the oil futures, but often there can be a lag between the oil futures and stuff like XOP, which is a ETF basket of oil producers, or individual oil names. So a cool way that I would play that is when this weekly oil number would come out, if oil went up on this number, I might be able to quickly buy XOP or any of these individual oil names and play it as a quick little scalp play, as those names would go higher in parallel with the move in oil. Another really cool easy money play is big levels in IPOs. IPO trading is some of my favorite stuff that I would do. And especially in a hot IPO market, you can see some incredible moves. There's years like when Alibaba came out, and IPO'd, you get these plays where the stock just clearly trends and it just stair steps higher and stair steps higher. So what I'll often do in IPOs is, let's say a stock price is 20. Often that pricing level can be a very, very important level and also get support from the bank syndicate and become a level of resistance. There are a lot of times in IPOs when you can risk mere pennies against those pricing levels with some huge liquidity there and able to scalp that out 10, 20, 30 cents higher, or often even catch points and trends in these moves. Another great example that I love as far as easy, smaller money is playing little breakout plays. I would be constantly scanning the market for really tight patterns of support and resistance, or where might there be a seller holding a stock down, creating a resistance level. These are places where if you have tight resistance at $10, you can put your buy stop in and very easily buy 10.01, 10.02 and scalp that out at 10.10, 10.15, and 10.20. And so a lot of these plays really, really add up. It's not about hitting the home run, but it's about finding and setting alerts and using technology to capture some of these scalps. The other thing that was a common winner for me is playing the level 2 box, or as many would call it, reading the tape. A lot of times what you can see is large liquidity pop in and out of stocks. Maybe maybe a stock is selling off pretty steadily, and then a large institution wants to buy 50,000 or 100,000 shares. There's times where if you're quick and if you're watching for this stuff, you can quickly buy in front of that bid, risking a penny or two and using him for liquidity and able to scalp at 10, 20, 30 cents higher again. There's a lot of ways to do that. And one other common place is when a stock is stuck in SSR, short sale restriction mode, because it's down 10% or more. So often what you can see is a lot of times liquidity will pull up on the offer. And if you can get short quickly in front of that, you can often play a scalp down lower, or there's times where those offers and that liquidity kind of pegs lower. Then as that gets taken, getting long allows you to also play a scalp as that liquidity gets taken and people scramble out to cover. So to make all this even more relevant today, one thing we've seen throughout this whole year, and as I like to call moving to the broken slot machine, probably one of the biggest easy money opportunities this year has been playing the monthly CPI number. This number will come out pre-market at 8:30 a.m. And given that this year it's been such a interest rate driven market and everyone's so concerned about the Fed moves due to their desire to tamper down inflation, this CPI number has led to really, really huge moves in the market. So how might one play this? Well, the easy way is when this number comes out, the market tends to trend huge as participants need to readjust to the latest inflationary outlook and in turn the Fed outlook. And yes, the NASDAQ or the S&P might shoot super quick. Again, everybody knows there's algos in this. But what you can do is you can find the laggards. Right? All the big money is going for the super liquid stuff, but that leaves plays available that they're not looking at. There's small little tech stocks that's highly correlated to the NASDAQ, where when the NASDAQ's shooting down, you can still short these stocks. We've seen laggards in all the big tech names to even to the smaller ones. And these are high beta stocks where you can really catch high probability multi-percent moves. Without spilling all the sauce, these are a huge amount of easy money plays. And look, maybe these aren't right for you, but hopefully these trigger some thoughts on how you can make these your own, or how you can use liquidity, or how you can use levels, or how you can use different catalysts in the market to find some scalps and easy money that you can make your own. So now best practices for implementing this. What might be the quick, easy trades that you're underappreciating? Is there something that you're always licking your lips about that's replicable and you know you can push further? Maybe it's just a matter of $100, $500, $1,000. Maybe it's a little imbalance play. Maybe it's an open order flow play. Maybe it's a little arbitrage play. Whatever these are, I highly recommend you systemize them and build technology and alerts to do more of them. Playbook this and make this your easy money trade. Another way I like to enforce this or cement this is doing a daily report card focusing on capturing these. With some of the S&B Capital work, I've been pushing the traders here to ask themselves each day, what was the easy money trade for me? And when you really focus and reflect on these, it can be such an easy way to build on these. And even in my own trading, for my DRC, which is a template I've shared publicly, every single day I had to answer and reflect on what was the easy money trade. I did this practice for years, right? I don't expect you to be able to make a playbook out of these overnight, especially if you're a newer trader. You're saying to yourself, easy money trade, no trade's easy money. I don't know how to build this at all. And look, it's going to take time. I understand that. But if you really start to pay attention and focus on these concepts and direct your focus there, it will happen over time. Especially use the examples I gave above to help shift your mind that way. One other thing to finally do is share your DRC with others so they can learn from yours and you can learn from theirs. So many people try to play everything close to their vest and they think to themselves, why would I ever share my easy money trades with someone else? Or why would I ever share this to the FinTwit trading community? Well, the answer is because they might have something more to share with you. A lot of these plays aren't necessarily only one person can trade them. There's room for others in a lot of areas of trading, and those people often will reciprocate. And this allows you to expand and benefit as well. So in summary, fight the bias towards home run trading, especially in this market right now. Easy money trades aren't sexy. They're essentially the workhorse that pays the bills. It might be the $50 here, the $100 there, but even making $100 each day, that can add up to $2,500 per month in trading profits. It's so critical to grow your trading and increasing size and scope when you have these easy money trades you can rely on. So I recommend you build an easy money playbook where you focus on these high probability, low stress trades and make it a part of your DRC to focus there. These are going to be critical for you to fall back upon, especially in tough times. So now that you have this strategy for getting to profitability in the quickest way possible, and now that you've learned the ins and outs of my top 5 easy money trades, you're much better equipped as a trader. But don't make the mistake of thinking that's all you need. To become a profitable trader, there's another absolutely essential skill that you can't do without. If you don't have this skill, there's little chance of becoming consistently profitable. So what is it? Well, lucky for you, I cover in depth in the video appearing on your screen now. So make sure to click on that and watch it because it's virtually impossible to make it in trading without it.